The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the terrific Tuesday, the May 25th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. But more important than that, that's this. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, we've got you covered there, too. You can always send me an email. Send it to steve@tfnn.com. Inside the subject heading. Please put radio show question, of course, in our Tigers Den. Well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Most of the indices trading lower. The Dow's off 12, the S&P 4, the NASDAQ 110, the Russell 2. Semis are up 4 points. Spot volatility trading out at 1882, still below its 50-day exponential moving average. Gold's up 13 bucks. Silver's up 17 cents. Light sweet crude is up a quarter. Leading the charge dollar-wise, the upside, Sam Adams. Boston Beer up 46 bucks. Restoration Hardware 23. Coinbase is up 14. Mercado Libre 13. To the downside, AutoZone 34 bucks, 2%. Shopify 20 bucks, 1.75%. Dicom Industries 11 bucks. That's 13%. Vimeo down 8 or 16%. But let's first. So that's what's going on in the markets. Of course, what we want to do is go to our first caller. So we've got a caller. It's that Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How are you doing this afternoon?
I'm doing great, Steve. How are you?
Uh-oh. We don't like that sound. Hello?
Oh, what's that? Hello?
Connection is poor. This is a bummer. Jim, you there?
Yes. Can you hear me?
Golly. Yeah, I can hear you. I'm not sure what the technical issue is, but let's try to push through it. Sorry about that. But Disney is what you're calling about. I think we spoke about this last week. Why don't you update everybody what you're doing and how I can best help you?
When I called last week, I had 50 shares of it, and I talked to you about it, and you gave me some numbers about levels, and after it hit a couple of those, I went ahead and bought 50 more shares of it, and I'm up overall about 1.75%, something like that. And
okay. I'm
curious about, like on a day chart, if there's going to be how strong the resistance might be at 177, 73, something like that on a day chart. And if you think that's going to be very strong resistance or not, and where the other resistances up from there might be. So.
Sure. So, Jim, the 177.52 level, that comes from the bottom of the weekly profile. So on the daily profile, for example, yesterday was a day that you liked because price was able to close above the top of the daily profile, 173.24. Second day today up above that level as well. So on a daily time frame, it's suggesting that there's a change in trend. But we have to go from the daily when there's no profile levels to the next higher time frame. In this case here, it would be the weekly time frame. And there what we saw, and we talked about this last week, that Disney had closed below the bottom of its weekly profile for 2 sessions in a row. So intermediate term-wise, it needs to get above, close above, get back inside that profile. And that's the 177.52 area. I don't really have a tool or a way to make a determination whether price is going to be able to overtake that level. All that I can do is say to myself, okay, because the high today is 177.45 versus 170.52 being the bottom of that weekly profile. So we know that price is up at a potential resistance. Well, we know it's a resistance area. The question becomes then on the short-term basis, like a 30-minute chart as an example, what patterns are associated? Is there a high? Well, it turns out that when Disney opened this morning, it gapped up. So that's a bullish signal. But by the end of the first half hour's trading session, it pulled back and it created a bearish shooting star candle. So which one is correct? And I don't know the answer to this. The reason I don't know is because we have both a bullish and a bearish candlestick. Now, that one, on its own, I wouldn't really pay much attention to it, but this is not on its own. What I mean by that is, as price was gapping up on the 30-minute time frame, it triggered a Rhodes momentum indicator signal. So that bearish shooting star confirmed that topping pattern. However, that's only step one. Step two, Jim, is that price must close below that oscillator and change line, and it's not doing that yet. So it's up above the I think it's up above all profile levels, for the 30-minute time frame, and it's above the green oscillator and change line. So this is a bullish signal. But really, on a 30-minute time frame, Jim, your message is neutral because of that shooting star. So price has to get above today's high, 177.45 out there, to kind of negate that pattern. So even though to me, I would say this is a good sign, but really it's a neutral sign. Let's just be honest. On a 65-minute time frame chart, I don't have any kind of a topping signal. The 130, I have a TD9 count top, so that makes today's high equally as important for both the 30-minute and the 130-minute chart out there. On the daily time frame, I know everything is pointing to wanting to head up to the 186.97 area. So your question, I believe, was, will price be able to get through this resistance level? And what I can share with you at 1:13 in the afternoon is we don't have any signals to suggest that it can't. Does that make sense?
Yeah, it sure does.
Yeah,
I know it's kind of hard to be able to really say definitively that it'll go through that.
Well, yeah, but we do have a set of tools that says, okay, when we come up to a larger time, any time frame where you're coming into resistance and you're trying to understand, is that resistance going to hold? Are we going to make a turn? Then what I like to do is go to the shorter term time frame charts, because we would typically see a signal there if this is just a counter trend rally. So we can't make that call just yet. And if it's me, I'm still hanging on to the trade. Because on the daily basis, we didn't cover this, but you and I covered this when we spoke about it earlier last week. This did form a nice TD9 count bottom right at the TD9 breakout support level of 168.03. So this is giving you everything that you want, and now it's just a matter of understanding where the battle is, and we've got that battle, so you're aware of what's going on, and I would still just stick with the trade. Okay. But that's just me. Right. That's just me.
Yeah, I'm with you. I have a problem sometimes of getting out of a trade too late and getting into them too early sometimes.
Well, here's another reason for you to stay with this trade, Jim, and I'm sure you've noticed this. But on the weekly basis, this formed both a TD9 count bottom and a Gartley buy last week when it generated that hammer candle. Don't close out this trade. Not yet. You've got too many good things going for you right now, okay?
Okay, I appreciate you, Steve. Thanks very, very much.
You bet. Thanks so much for calling. Steve Rhodes with TFNN. Would love to hear from you, too, as well, folks. 877-927-6648. Be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873.
Back up, folks. Mixed bag out here. The Dow's up 12. S&P is flat. NASDAQ 100's up 14. Russell's off a point. Let's go to a question that's come in here. This one coming in from Stash. Let's see here. What is the question? That's small print. I got to try to expand this. I can hardly read this. Yikes. Stash is saying Lumina. Lumen. And I apologize. I really can't read what you've got going on here. But I think you're just asking, hey, what is it doing? So let's take a look at Lumen Technologies. Right now we can see that price is consolidating with inside its daily profile. What we want to do here in a moment, we will, is just try to understand that this formed some type of top on May 17th, May 18th, May 19th, right around there, because you can see a bearish reversal signal here. So the question is, was there some kind of a topping pattern? We'll go answer that in a moment. Price right now trading well below the bottom of its, trading well below the center of its daily profile and into the last downdraft, which was on May 20th, and there was about 10 million shares. You're pulling back with lighter volume. That does not mean that price won't get down to 1389. That's what the signal is on the daily time frame chart. Weekly time frame chart looks very good because price is above the top of its weekly profile, and the monthly says to the upside, the resistance, the battleground is going to be at 1530 if price does move higher. Let's take a look at my white background chart, see what other signals we might be able to glean from the charts. And right now what we can see here, this provides us with more clarity. And I know you're probably saying, well, why didn't you just start with clarity, Steve-O? A fairly good point, but I didn't. But here's where we're at. You can see that when that spike high took place, that was bar number 8 of a TD9 count. The very following day, you get the confirmation. So the fact that you got a bearish engulfing, does and that next trading session really doesn't impact this pattern. What's being impacted here is right now today, you've got price below the oscillator and change line. That's 1431. That's really a signal that price should pull back to 1389. But if price closes below 1389, and we don't know if it will or it won't, but if it does, then your buy area, if this is what you're asking, is at 1290. And 1290 is the TD9 breakout level. That was courtesy of that TD9 count top from a few days ago. So the signal on the daily time frame is to at least anticipate a pullback to the 1389 level. If you're looking to add or begin a position, I can see that as one possibility. But the better spot would be 1290. Let's look at the weekly time frame chart. The weekly time frame chart shows us what? It shows us a Rhodes momentum indicator signal has been triggered but hasn't been confirmed. But this says price could pull back or should pull back to the 1378 area. So we got 1378, 1389 as two real key areas. And if those levels fail, then we know that price should go target the 1290 level. On a monthly time frame, I don't have anything out here that's going to assist us. We take a look at the shorter term time frames. For example, on a 30-minute for LUMN, this is potentially forming a bottom as we speak right now, as we come into the 130 time frame. As we come into the 130 time frame, which is 9 minutes from now, it looks like this will confirm a TD9 count bottom. Price should at least bounce up to 1419. Now, I know you're saying to yourself, Steve, well, I thought you just said it looked like price is going to go lower. We were looking at larger time frames. A daily time frame is way different than looking at an intraday chart for a 30-minute time frame out here. But on the 30-minute time frame, it is saying, hey, I'm trying to form a bottom. On the 65-minute time frame chart, what do we have for LUMN? Not much. If anything, the chart interpretation is that price wants to move lower. There's really not much showing up here for the 130-minute. There's not anything showing up for the 195-minute. So at this stage here, with regard to LUMN, and based upon the way things are trading on a daily basis, this is likely going to target 1389 to 1290. So I hope that helps you out, Stash. And thanks so much for writing in. Just sorry I couldn't clearly read the print. It was pretty darn small. And these eyes today, that's a tough thing. Okay, I'm sure there's a way for me to change my font size out here, but yours just happened to be particularly small. I'm reading one right now from David in Panama City. And David wants to take a look at LRCX. So let me get LRCX going on this white background chart. It takes just a few minutes to populate, which is one of the reasons why we take a look at the black background charts, but also on these black E-signal background charts, LRCX out here. See if I can do two things at once. I can't. Is in one snapshot we can see what's going on profile-wise, daily, weekly, monthly. Here we know price is above the top of the daily. That says, okay, go see what's going on the weekly. Well, the weekly's in a bullish structured profile. You're becoming a pro at this. You tell me, David, where is price headed to? And let me see what your questions ask for. Somebody in the den. Anybody in the den, tell me where is price headed to? Based, you know these tools, or you've listened to the show long enough. You tell me, where is Lamb Research headed to? And the question is, Steve, do you think based on the charts that LRCX will take out 668 by this Friday? You've got the 640 calls. Now the timing of it, that's a hard thing to do, David. But here's what we can share with you at this moment. Price is going to go target 669. That's the message right now at 123. If price closes below 635.53 come day's end, that is not the message. But closing well enough above the center of a bullish structured box says that price should go target that 669. Does it do it by Friday? Well, that's a tough one, but it should do it. Now, what we've got to find out, is there any other resistance in between here and there? Well, where's here and there? Well, turns out there is. 659.60 is the TD9 breakdown level. You were asking about 668. And 669 is certainly the top of that monthly profile. But you've got this thing is coming up into that resistance level of 659.60. So here's what I would be doing on those calls. I would be focused on 659.60. And I would have your order set up so that you could close out those call positions if price gets up to that 659.60 level. Hey, maybe it gets higher, but you right now, man, is that wonderful English or what? But you know right now where the battle is. So you got the battle. Whether price can take out that area and you get another $9 or $8 out of it, it's not worth it. Well, it might be worth it to you. It wouldn't be worth it to Stevie. I'd rather just take the bread. On a weekly basis out here, you can see that price is also up at resistance. Now that resistance, we were looking at that weekly profile, that resistance being that oscillator and change line, which is 651. So now we go back to that daily and say, okay, yeah, that 659.60, have your order, and don't use 659.60. Use a few pennies or something below that, or don't use the exact number. Don't force us to do that. On a monthly time frame chart, everything looks very good so far. We populated. Yeah, I don't see any problems on the monthly chart per se, not right at this moment. Short-term time frame charts out here. There is a Rhodes Momentum Indicator top. It was confirmed. That is on the 30-minute time frame, but nothing has been broken. Broken would be a close below 635.92. And if you see that, then that's going to put some real pressure on that trade of yours. So you want to see 635 hold as support. 65-minute time frame chart, things look good here, even though this Rhodes Momentum Indicator signal. Price is pulling back and testing that green oscillator and change line at the top of the profile. That is good out there. So stick with the trade. And 659.60, that general area is where you should really consider exiting that trade if you get it, and that would be a nice little gift for you. So I hope that helps you out. David from Panama City, thanks so much for writing in. Much appreciated. Let's go out to Earl in Seminole. Earl, thanks for calling. Thanks for holding. How are you today?
I'm doing pretty good. I'm having a little trouble reading the chart on silver. I got a lot of silver stocks, and I was wondering if you see silver going to pull back, and if so, to where?
Sure. So, hey, Earl, we're about to go to a hard break. Great question. When we come back from this break, you and I will spend time answering that question. We're going to take a look at silver, the silver contract, folks. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the phone with Earl. We're taking a look at silver out here. The active contract is still the July contract, and you were indicating that you're having some trouble reading the silver chart. So let me share with you the message that I see. Earl, are you familiar with the A to B equals CD pattern that we talk about here at TFNN?
Yes, I am. Mm-hmm.
Okay.
Yeah.
So as that pattern forms, I'm just going to expand out the chart, make it easier for people to see. So as the pattern, sometimes the pattern needs to continue to form, and you just simply use new swing points, which is in essence what I've done here. So we're up to date, and you can see there's a 1-to-1 A to B equals CD, gave us a price projection of 28.73. Now, just because it hit 28.73 doesn't mean that the move is over. The way that the A to B equals CD pattern will confirm for us that it at least is forming in this case here, at least a top or a short-term top, is it'll generate a bearish reversal candle. Well, it actually did that it was a 3-candle pattern. It did that on May 19th. So as priced the day before, it went ahead and hit that 1-to-1 area. We use those as guidelines, Earl. It doesn't have to hit right to the tick or anything along those lines. But we do have a confirmed A to B equals CD pattern, which means we have a confirmed Gartley sell. We have a confirmed sell the D point. Now, that might sound ominous, but when you get topping patterns, they must break through key levels of support in order to confirm that it really is a topping signal and that there's going to be a change in trend. What we don't have in silver is that. We do not have any break of support to suggest that this is any kind of a top of significance. Where price would need to close below to suggest, okay, there's a change in trend, will be $26.99. And you're trading at 28.09. In fact, what price is doing, it appears that it's going to try to go take out the 28.26 level. That is the top of its daily profile. Don't know whether it will or whether it won't. But right now on silver, and I'll pull over my other charts, but any questions about so far this daily time frame chart, the A to B equals CD pattern, support, anything along those lines? Any questions so far?
No, I'm following you.
Okay.
I'm following you. It just seemed to me like it was languishing, you know what I mean, instead of giving a direction. But I see what you mean.
And that's a good point, and it is. And the reason that it was languishing was because it generated that topping pattern. And so it intuitively knows sellers are saying, hey, I'm going to try to take advantage of this. And really they did for a couple of trading sessions, but they were never able to bust out any key levels of support. And again, that level is 26.99. When we take a look at my other daily time frame, what we're going to see is there was also a secondary topping pattern. That's wave number 7. I don't know if you listened to any of Basil Chapman's work out there, but I love that 7th wave move. And so courtesy of Basil, that was also another topping signal. Now, what price is doing as we speak right now, it's trading above a green oscillator unchanged line. There's nothing more bullish than a rising price oscillator above 0. And when we have price trading above green line, that is its message. So its message is that it should go try to tag and take out that resistance level of its daily profile. And again, that's going to be at the 28.26 level. If we take a look at our short-term time frame charts, because this is where we would see the earliest type of change in trend signal, we don't have that. In fact, if anything, and I was out of the office this morning, but at 10:30, silver just took off topside. Now, what I mean by that is on a 30-minute basis, it's a wide-ranging bar out there. So I don't know what was behind that move, but I can share with you that that move was bullish from a 30-minute standpoint. And so the importance there is we don't see any kind of real topping signal that would say, hey, a problem. Why else is silver struggling around this area? It comes down to, Earl, the 60-minute time frame. The 60-minute time frame has a Rhodes momentum indicator bottom that formed out here at about 1 o'clock in the afternoon on May 21st. And what price did during that spike this morning was it got right up to 28.08. It actually got above that. But that 28.08 level is its TD9 breakdown for the 60-minute time frame. That's an area where if price can get above that, it should go hit those other areas of resistance, but it also becomes bullish, and maybe it's going to take those areas out. So really to net this whole thing out, yeah, it was languishing for a real important reason. It had formed a topping pattern out here. But right now, it looks very strong. And so if you're in it, stay in it. That would be my suggestion.
Yeah, and my question was, when you're playing these markets, I know everything doesn't go straight up or straight down, and I was looking to maybe even play a few close-in puts.
Again, you don't have,
I have long positions pretty far out.
Yeah.
So I was thinking about playing some puts close in.
Right. Well, I don't have any signals out here. And no, we covered those, even those short-term time frame charts out there. So I'm not against it. I would be against the timing as we speak right now, 1:35 in the afternoon. It doesn't make any sense based upon the chart signals that we have. So does that help you out?
I don't mean right now, but
okay. Look, the other thing, here's the other thing that each of us have to keep in mind here, and it's more of a fundamental aspect. There are several hotspots going around across the world. In any one of those hotspots that could explode, so we're talking what? We're talking what's going on in the Gaza Strip. We're talking about what's going on in Taiwan. We're talking about what's going on in Ukraine. Any one of those could be some type of snafu. And so do you really want to be short precious metals knowing that there's those type of geopolitical, on top of the fact that the charts are pretty bullish?
Yeah.
So that's my take. I say right now is a more difficult time to be short gold or silver, knowing that one of those hotspots fires. Where do you think money's going to flow to?
Yeah, you're absolutely right. My only thought was I was having trouble finding the bottom of where it might go, and there's just not enough room for it to go down, really.
26.92 would be the gift if it could make it down there. But we just don't have a signal right now to say that that's what's going to happen. Okay?
Yeah. Thanks a lot. Thank you.
Yeah, my pleasure, and thanks so much for calling. That was Earl in Seminole. We're going to go out to Philly and speak with John. John, thanks for calling. Thanks for holding. How are you today?
Steve, well, I'm very good. Thanks for taking the call. And I wanted to call up to your previous caller's call on silver with a question on COMEX gold, please.
Okay, you got it. And it's the December contract that you want to look at?
I want to look at the June for the time being.
Okay. They type in here June. So, so fire away. Tell me what you're looking for.
A very specific question. If, in fact, COMEX gold is in an acceleration move, intermediate term, that began way back there on that Monday, March 8th, down there at that 1670 level.
Right.
And I'll just say parenthetically, this price action just screams at me that's what this is. And if so, we march through much of June higher. But that as background, can you share with us what you'd be looking at in terms of levels just under the market that would warn to us, no, it's not in a accelerating march higher, and in fact, we've got to be worried about the downside. So if you could share with me the support levels you'd be tracking as we're moving up here.
Sure. So great question, John. The area that we would be concerned with is the price action of today, tomorrow, and Thursday. And the reason that I say that is that today looks like we will get bar number 8 of a TD9 count. Hey, John, we're just about to go to a hard break. Please hang on. We'll come back and answer the questions that you've got for gold. This is Steve Rhodes with John in Philly. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with John. We're taking a look at gold, and so let's go analyze the gold contract out here. First, on a daily time frame, John. Oh, John, I guess you're not there. So let's just we'll walk through this here. I mentioned earlier, I'm going to turn price off just to show everybody the profile, the new profile that's attempting to form. Will it form at day's end? I'm not sure. But here's where it is right now. The resistance level is at 1893 and prices above that. And this is a bearish structured profile. 1878 is the center and 1857.10 is the bottom. So you want to watch 1893.20 come day's end. If price closes above that, it's a bullish signal, but the profile may not form. Regardless of whether it forms or not, if price does close above that 1893 level, it's suggesting that on the A to B equals CD leg, it's heading up to the 1908 area. What we could also say, John, is the retracement here was only a 0.382. It was really 36% retracement. A very small B to C leg. So what does that tell us? That tells us that price is going to do more than a 1-to-1 A to B equals CD. Well, that's easy to call, Steve-O, because it's already done that, and it's doing that. I understand that, but you've got to take a look at that B to C retracement. So this could easily move up to 1908, 1949, because there's the A to B equals CD leg, just like Earl and I were talking about with silver. You still have to be on watch for some type of bearish reversal candle. That would confirm a Gartley sell pattern. Will that happen? I don't know. I just know that you've got to be on the lookout for it. So let's take a look at this set of charts. This also looks pretty good if we go over to the weekly time frame. The weekly time frame formed a Gartley buy pattern, and it did it right here on this week of January of 2021, the first week out there, when gold went ahead and formed that nice bullish hammer candle. Price is trading above the top of its resistance of the top of its profile. That's at 1882, and that says, hey, I'm in bullish breakout mode. However, before we go there, we really have to take a look at what other chart patterns are present right now. And if we take a look at the June contract for gold, today is going to become bar number 8. Now, when a TD9 count top forms, it'll be on either bars 8, bars 9, or the bar following 9. That's why I said to John, a top could form between today and Thursday. Just simply utilizing that pattern. Don't believe me? Just go back and look at the chart. When was the last top that formed with any significant decline in gold? Well, it just so happens John identified the bottom back on March 8th. What he didn't do was say, hey, guess what? It formed a TD9 count top back on March 18th, and that took price all the way back to that breakout area of 1679.70. That was really the buy. That's when subscribers and I got into a long trade in the miners back then. It might have even been right on March 31st. I can't recall. Might have been the day after. And we're still in this trade out here. And we'll stay in this trade until we get a confirming signal to be out. Well, what would be that? Well, it could be a TD9 count top and then price getting below the oscillator and change line. Of course, we would see something else going on in the short-term time frame chart. So the daily says you've got to be cautious for the next couple of days out here, John. The weekly chart says, hey, guess what? You do have to be cautious the next week or two. Why? Because this is going to be bar number 9 of a TD9 count on the weekly time frame. So now we've got the potential on the weekly and the potential on the daily out here. So yeah, there is real reason to be cautious based upon these patterns. Don't believe me? Go look at the charts. When gold formed its weekly top, what pattern was out there? There was really two, but the one that we're talking about right now is a TD9 count. That was present at that most recent high. When this bottomed, back when we just took a look at those bottoming signals, what pattern was it? A TD9 count. Does gold like the TD9s? Yeah, I would say that it does. So this is a reason this week and next week to absolutely be cautious out here. Now, on the short-term time frames, there's no reason for us to go over and look at. There's no topping pattern or anything that's confirmed at this stage of the game out here. So, John, I think that's what we have to be looking for. Is this getting ready to take off and go topside out here? Well, I'll go back to the same thing that Earl and I were talking about, which was, hey, there's enough geopolitical events out there that should one of those events take place, you could easily see gold. I would anticipate that we would see precious metals move higher. What else would move higher, folks? If we see some type of geopolitical event going on, what else would move higher, especially if it's war-related? Now, maybe you don't know the answer to that question, but think about it like this. Whenever there's any kind of war that takes place, of course, you never know for how long. If it's just a short blip, then we just simply would call it a skirmish. But if it's a war that lasts, thousands of years, such as the one over in the Middle East out there, there's never an end to that. So, yeah, that's a little cinder box out there. But the point is, I asked you, where else is it that money would flow to? Well, when wars begin, people understand, big money understands, there's a likelihood of a debasement of the currency. Yeah, a likelihood of a debasement of the currency. So what does the smart money do when they sense a war? They get the Sam heck out of Dodge. So where would they go to? Where is it that people have the most confidence right now? Now, maybe you can't answer that question, and maybe I can't off the top of my head, but all we have to do is go take a look at our tables out here. So when we go take a look at our global flow of capital tables, and that's this right here, all we have to do is get a sense, where does global capital have confidence, if at all? Well, when we take a look at this chart, and this chart is our table is allowing us to take a look at the U.S., Dow and S&P futures contracts. It allows us to take a look at the DAX cash indices, the FTSE cash, the Shanghai, takes a look at gold, the Nikkei, the Hang Seng, Australia, emerging markets. You see the whole sundry out here. So here's what we do know. If there is a skirmish, what we should see is money flow into the U.S. stock market and into metals out there. So can things take off to the upside? Absolutely. But what are the signals that gold is generating for us? They are saying, hey, you've got to be cautious for the next couple of days. And if you can get through the next couple of days, you still have to be cautious even going into next week, because that TD9 count pattern that has formed. Now, there's a positive out here on the weekly because prices above that breakdown level of 1881. But what else do we have on this chart? For those of you that listen to this show, and thank you so much for listening to the show and trying to understand these tools out here, what else is present on the weekly chart to suggest that this TD9 count is going to form and we should see price pull back and test what? Exactly. The oscillator and change line, the Stevie green red line. It changed colors this week. And when it changes colors, it tells us about an eventual hookup of price and that line. It's over the coming sessions. Well, this is a weekly chart. It could take a month or so. But what we typically see is a stalling out. And now we've got the TD9 count on the weekly basis. Yeah, there's reason to be cautious out there. So, John, I hope that answers your question out there. Really similar to what we took a look at with Earl, only in silver, it already has a topping pattern that's in place. But again, its overall signal is simply neutral. There's another question that came in. This is from Ruby. And her question is, So Ruby asked me the question, Steve, with gold moving up, is there any chance for the miners to push the Russell 2000 up? You're short the Russell 2000. So, Ruby, let me just pull this over. When I say this, give me a second here to actually get it. Pull it over. And that is, oh, man. Here we go. Okay. This is, well, all I did, Ruby, was a search, and I typed in Russell 2000 sector weighting. Now, this is as of when, though? That's the thing. And it's going to be 12. This is as of 12/31/20, so that's not good enough for us. But when I take a look at this, Ruby, I don't think things have changed too much. Consumer discretionary, that's 13%. 15% for financials, healthcare 21%, industrials 15%, information tech 14%. I don't think the miners are going to have a significant impact on the Russell 2000, not at least the way that I'm looking at this set of data. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Got a couple questions. We'll try to squeeze everything in here. NVIDIA was one of the questions. You like yesterday's action, price taking out their TD9 breakdown levels. The suggestion here is NVIDIA is going to go target its recent top from back on April 15th, and that is in the 648, 625-ish. Here you're already at 624. So it looks like it wants to head higher and do that. That's what the daily time frame tells us. The weekly time frame is generating the same kind of a signal out here. So price inside of NVIDIA should get back to at least retest its recent highs. The next question was about ticker symbol MVIS. As we take a look at it from a daily time frame, just this sideways move. Price should continue higher, but resistance is at 1620. Out here, you're at 1575. That's at least coming from the daily. The weekly shows 1630. And the 30-minute time frame chart says price is dealing with resistance right now at 1579. And it could form a TD9 count, but we don't have that confirmed signal out here. So you've got price up at the resistance inside of MVIS. Watch the 30-minute, see if it forms a TD9 count pattern. If it does, if price takes that out, then that tells you about a strong momentum move for that time frame to the upside. The last one to take a look at is this is for Eric, who sent in an email, and it was ticker symbol IRM. And your questions are just thoughts on taking a long position. Well, on the daily time frame, I wouldn't do it just yet because you've got a Rhodes Momentum Indicator signal triggered out here. But it's been triggered. We don't have any kind of real – oh, sorry, didn't get to the 10-minute chart out here. Oh, so the 10-minute chart says, yeah. So a TD9 count is what it formed. Price breaks through the first level of breakout support, gets to the second level. We're now down below the second level, which is 43.41. We're actually trading at 43.41. So this looks like 43.13 will be the next price projection level for ticker symbol IRM. Folks, thanks so much for being here today. Stay tuned for 2 more great hours of programming. I'll be back with you on wonderful Wednesday. Have a terrific Tuesday. Be safe out there and take care.